We're going to take a quick break for the closing bells here. You just heard them ring, and you see that some of the indexes have turned around there. The Dow and the Nasdaq flipping back up, although the S&P still down. Little change, really, when you look at it. Let's also get to Washington, D.C. Breaking news on this at this hour on the Treasury, finalizing its long-anticipated plan to help banks get rid of those illiquid or toxic assets. Bloomberg's Peter Cook is standing by in D.C. with the details on this PPIP program. Peter?
Well, Matt, you talked about the headline just a moment ago. Back in March, you recall the Public-Private Investment Program, the PPIP program, seen as a key to solving the financial crisis as Treasury Secretary Tim Geithner announced plans to channel as much as $100 billion in private investments and government funds into purchases of mortgage-backed securities that were clogging bank balance sheets. Ultimately, the program anticipated it could reach even $1 trillion in scope. Today, a more modest effort was sort of formally launched by the Treasury Department in conjunction with the Fed and the FDIC. $30 billion in Treasury funds being used as well. The Treasury Department announcing the formal selection of asset managers pre-qualified to participate in this program. We've been telling you some of these names for some time now. AllianceBernstein is on the list. Angelo Gordon & Company, joined by GE Real Estate, BlackRock, Invesco, Marathon Asset Management on that list. We also have Oak Tree Capital Management, RLJ, Western Asset Management, the TCW Group, and Wellington Capital Management. Each of these firms pre-qualified. They will get an equal allocation of capital from Treasury. They will invest themselves a minimum of $20 million of their own money. They now have 12 weeks to raise $500 million of capital from private investors. Once they do that, they can access Treasury funds to start buying up some of these assets. Treasury will also provide debt financing up to 100% of the total equity in the PPIP program. The program will start with commercial mortgage-backed securities and non-agency residential mortgage-backed securities. They've been issued. They have to have been issued before 2009. They have to have had initially a AAA rating, and the first closing is expected, according to the Treasury Department, in August. So again, Matt and Carol, this is a more modified program, but the Treasury makes clear that this could be expanded over time. And the Treasury Secretary has made that argument for a long time that simply the threat of this program, the potential of this program, has helped unclog the markets to some extent. They think this formal launch will do even more.
All right, Peter, thank you so much. We want to draw everybody's attention to Alcoa. Trading has been halted in that stock. As you know, we're just waiting earnings from this company. We are looking for about a 38-cent share loss for the quarter. As for revenues, just about shy of $4 billion. That would be down about 50% from a year ago. Already one headline involving Alcoa, and they're talking about their capital expenditures. As you know, this company has been cutting costs drastically. They are saying their 2010 capital plan cuts CapEx to $850 million. So they're talking a little bit about what they plan to do in terms of capital expenditures. But again, we are waiting these earnings numbers. Actually, it's expected to really be a loss for Alcoa. It's really kind of the first official big-time report when it comes to earnings season. Very key company, an industrial company. Many companies use aluminum. So in terms of what they say, could be indicative not only of what's going on in the economy, but somewhat as well the earnings environment.
Of course, many companies that used aluminum have gone bankrupt, including General Motors and Chrysler.
Several.
All right, let's go down to Lydia Thew right now. She's standing by the New York Stock Exchange with more on today's market moves. Lydia?
Hey, Matt, we had a bit of a whipsaw day here. We were down for the majority of the day. It started out as a promising session, though, after that IMF forecast helping boost stocks at the beginning, and then we ended up much, much lower, dropping through what was considered to be sort of a psychological support level of 880 on the S&P 500. We got some pretty good results on that Treasury auction that helped give a boost to stocks in the middle of the session. And here we are, interestingly, defending that 880 level. We're closing just a hair below it, 879.5 on the S&P 500, though closing in the green. Now, what moved on the day? You did have telecom and financials were the weakest groups in the S&P. Healthcare, the best performer in the S&P, really helped along by shares of Amgen in particular. On the flip side, in the financials, you had those futures exchanges, ICE, the Intercontinental Exchange, and CME Group really showing weakness yet again on concerns about what's going to happen with the CFTC and potentially reining in some of those speculative bets on energy futures. Of course, what everyone's waiting on, and we're waiting on those headlines right here. What's Alcoa going to say, and what are the second quarter earnings going to look like, and what are these companies going to say about their forecast for future growth? But here we are, the Dow ending the day up 15 points, and the S&P down, but ever so slightly. During the middle of the day, it looked like it was going to be much worse than it actually was, Matt.
So, Lydia, let me talk to you about today's trade here. I mean, was this move kind of just a cautious move, a cautious setup ahead of earnings?
Well, and this is also kind of interesting because you have seen that surge in the VIX volatility index. In addition to seeing stocks really roll over the past few trading sessions, the VIX rising for a fourth day. We touched above 33 intraday on the VIX volatility index. It's just showing that investors are paying up. They're actually hedging their positions in case some of these earnings reports do end up being disappointing. But, you know, I spoke with Craig Peckham, who's the equity trading strategist over at Jefferies. He said that's reflecting trepidation on the part of investors. Investors looking for these earnings results, the second quarter earnings results, to justify the big move we've had off the March lows. But he says the fact that we've seen a rollover in stocks suggests that we may actually be setting up for an interesting upside surprise